If your smart money trades keeps failing, the problem is not your entry model. It is your top-down analysis. Most traders are glued to the 5-minute chart, chasing changes in the states of delivery and breaks of structure setups, but they completely ignore the bigger picture. And that is exactly why smart money takes advantage. By playing off your lack of higher time frame context, in today's video, I'm going to show you exactly how a professional uses top-down analysis to stay ahead of that market. You'll learn how to build bias using structure and liquidity, how to mark high probability points of interest on the 1-hour chart, and how to drill down to the 5-minute chart for sniper entries with precision. I'm also going to expose the most common SMC mistakes that traders make and how you can avoid them completely. So whether you are tired of getting wicked out or just want to refine your edge, watch this video to the end because this could be the turning point in your trading journey. So why top-down analysis is non-negotiable for smart money traders? Before you even think about entering a trade, you need to know where you are in the bigger picture. Smart money doesn't just react to candles. It moves based on higher time frame liquidity and structure. If you are trading without a clear higher time frame bias, you are basically guessing. Top-down analysis helps us align with institutional order flow, and that's what gives our entries real power. We are going to talk about how to identify higher time frame bias using structure, liquidity, and points of interest. So how do we build that higher time frame bias? First, we look at market structure. Is it bullish or is it bearish? Then we ask, where is liquidity resting? Above highs, below lows, around imbalanced zones. And lastly, we identify points of interest, premium or discount PD arrays, etc. This is what sets the narrative for the trade idea before we ever touch a lower time frame. We are going to go over the right way to drop down from the daily to the 1 hour to the 5 minutes, and that is my favorite time frame alignment pairing. So once you've got the big picture from the daily chart, you can drop down to refine. On the 1 hour, you might find cleaner order blocks or liquidity sweeps. You might find developing structures. Then on the 15-minute or the 5-minute, that is where you can wait for your entry model. Things like internal structure breaks, changes of the state of delivery, and displacement. Each time frame has a role, and the key is to stay patient and follow the sequence. We are going to talk about how to avoid common mistakes that ruin high risk to reward setups. One of the biggest mistakes SMC traders make is forcing trades on the lower time frame that completely go against what the higher time frame is doing. Just because you see a change of character on the 5-minute doesn't mean it's a valid trade, especially if it's running into a higher time frame order block. Another mistake is trading order blocks blindly without even considering whether the price is in a premium or discount. That is how you catch the wrong side of the move. And finally, we are going to go over real examples of higher time frame order blocks into lower time frame entry sequences. In this video, I'll show you exactly where we mark out a valid order block on the daily and then zoom into the 1 hour and the 5-minute to catch a clean entry. This is where SMC shines. Precise high risk to reward entries that are backed by a full top-down narrative. When you combine higher time frame context with lower time frame execution, that is when you start trading like the institutions. If you're tired of trading in circles, second guessing every setup, and learning from hindsight mentors, it is time to level up your trading to show you the golden standard of trading education. At The Simplified Trader, we don't just teach smart money concepts, we trade them live, right in front of you in real time with real accountability. Inside the mentorship, you'll get access to weekly live trading sessions, step-by-step strategy breakdowns, and direct support from someone who actually calls trades live, not just after they have played out. So whether you are brand new or refining your edge, this is where theory turns into results. So if you are ready to trade with clarity, confidence, and real consistency, this is the place to be. Now, before moving into some real chart examples, I want to explain the concept of top-down analysis using this drawing over here. On the left-hand side, we have a daily time frame. On the right hand side, we have an hourly time frame. This is from the same asset. Now, here on the daily chart, what do we have? On the daily, we have price pushing lower, making lower lows and lower highs. Here, we get a body closure above the series of consecutive down close candles that made this low. So this would give us our valid bullish change in the state of delivery. In this leg, we see that price action is busy trading back into what seems to be a bullish fair value gap. Now the question is, are you buying or are you selling without looking at the 1 hour time frame? You are buying. And so because we have a bullish narrative, because we have a bullish change in the state of delivery, we have price action trading back into a bullish fair value gap. Obviously, we are going to be looking for long trades. Now, if we forget about the daily time from here to the left, and we only look at the 1 hour view here on the right, what do we have? Keep in mind that this 1 hour view would be this little retracement here on the daily time frame. Here on the 1 hour view, what do we have? We have a swing high that was swept, and we had a body closing below the series of up close candles that made this high. So what does that give us? That gives us a valid bearish change in the state of delivery. Now, price action has traded back into that order block and potentially also into a bearish fair value gap. And we have also closed through these series of up close candles that traded into our order block. So if you have watched my propulsion block video, you would know that a valid propulsion block has been formed. Now price action is busy trading into this propulsion block. If we only have to look at the 1 hour time frame, what are we going to do? We are obviously going to be bearish because all these PD arrays line together to show us a bearish direction. And this is what we are going to expect from the market. But without looking at the daily, we have a bearish 1 hour. But if we go back and we look at the daily time frame, we can see that the overall narrative would be bullish. So we are going to wait for this to trade into that daily fair value gap, and then price action repeat itself, get our valid confirmation in the form of a bullish order block being formed, and that is when we can take a long trade. So this is the importance of having top-down analysis into your trading toolbox so that we can get a higher time frame narrative before taking unnecessarily losses on a lower time frame. Here we have our first example on NASDAQ or NQ, and we are on the daily time frame. We can see that price action has created a very big bearish impulse shift to the downside. And then what happened? Then in this dealing range, there are 3 fair value gaps. I'm just going to go ahead and mark out all of those fair value gaps. Remember, a fair value gap is extremely important because that can give you a bias and it can give you a target. Now, we've got 3 bearish fair value gaps. Remember, if price action is bearish, bearish fair value gaps will hold and it will support lower prices. If price action is bullish, bearish fair value gaps are going to get disrespected and be inverted. Now, what do we get here? We have 3 gaps. All 3 gaps were inverted with one single candle. And that happened, if we zoom out a little bit, that happened after price action has swept a long-term major sell-side liquidity. So now we can start framing a little bit of a bullish narrative here. But that is not enough for me to be bullish. Now what happens? Price action trades lower and we sweep out more bullish points of interest. Remember, a swing low is a bullish point of interest. Here we have a bearish fair value gap that price action can potentially react from. And let's see what happens when price action gets to that gap. Now, what do we have? Remember, we had 3 bearish fair value gaps that got inverted over here. Price action would pull back a little bit and traded into a sell side swing low. that builds on the bullish narrative because sell side liquidity fills a bullish run. After taking out sell side liquidity, the market does what? It inverts this bearish fair value gap. So now we can be pretty confident that our bias would be bullish. Let's drop to the 1 hour time frame to see if we can get any sort of entry reason. Here on our 1 hour time frame, look at what price is busy doing. Remember, our daily time frame is bullish, but here on the 1 hour, we've got 2 or 3 consecutive up close candles that got closed below. So what does that give you? That gives you a valid change in the state of delivery, which is a valid bearish order block. But if we were to sell, this order block stops covering the high and targeting to our minimum. Let's see how this trade would have played out. Remember, this is what your teachers are telling you. Wait for a liquidity sweep, which we got, and then we got our change in the state of delivery. So now we have the go ahead to sell. It is not that simple, guys. Here we can see if we would have taken this trade, we would have gone down a little bit, but ultimately be stopped out. Now, what do we have to do now? If I go back to where we had that bearish order block, we trade in alongside with our narrative. Our daily bias is bullish because we had that sweep with this low here. We've had that daily fair value gap, which is represented by this gray box, be inverted over here. So we have everything we need for a bullish narrative. We shouldn't be looking at short trades. We should only be looking at longs. Now what do? Now we wait for the market to trade into that fair value gap, which it does. And in the process of trading into that gap, it goes ahead and it takes out liquidity. Here we can see that we do have swing lows in the form of sell side liquidity. So now what we can wait for? Well, we have this one down close candle that made that low. So as soon as we get a body closure above that candle, what does that become? That becomes our valid order block. Now, zooming in over here, we are just waiting for that order block to form. Here on the next candle, we don't quite close above it, so not a valid order block. Instead, we start trading lower. We take out a new sell side swing low, so our order block moves to this candle's opening price. Now we need that body closure above that candle. What happens now? Now we trade lower, and there's nothing wrong with that. We just need to keep following price action. And in us trading lower, we sweep out a swing low and we trade into this fair value gap. So I still need a body closure above these 2 down close consecutive candles to confirm my bullish order block. We're waiting for price action to do that, and eventually we do get that closure above. So now what do we have? If we go back to the daily time frame, remember that our bias is bullish. We have this daily fair value gap that got inverted. Looking at the 1 hour chart, what do we get? Here on the 1 hour time frame, we trade into our gray box, that is our bullish fair value gap. We sweep out a swing low, so we are building on liquidity. And now we have that confirmation in the form of a bullish change in the state of delivery. If you are swing trading, or if you want to use 2 time frames, this is enough to take a trade. Stop loss covering that protected low, and our first target will be this swing high. Waiting for price action to do this, and there you go, we immediately hit our target. And now you can see the difference with using top-down analysis and getting a long bias, compared to just getting a trading pattern where you see a bearish order block and you want to sell that order block. Now you can see the difference with using top-down analysis. But how can we take this a step further? If we go back to where our entry happened on the 1 hour time frame. Remember, this is what our entry would look like on the 1 hour time frame. we can drop to our 5-minute time frame to further refine our entry, because our stop loss will be closer and our target will be closer as well. I'm just going to delete this 1 hour order block entry, and then we can wait for the 5 minutes to start aligning. That new candle opens up and we trade lower into what? We trade lower again into these breaker blocks over here. So price action trades into this breaker here. Keep in mind this is a little bit more complicated, and out of that breaker we can wait for a new order block to form. We can see that we hit our 1 hour change in the state of delivery here, and now we can simply wait for a new bullish order block to form on the 5-minute time frame. When does an order block form? If we look at price action here on the 5 minute, we have two down close candles that trade into our 1 hour order block. As soon as we go ahead and we close above those two down close candles, that becomes a new order block, but just on the 5-minute time frame. Let's see and wait for price action to do that. We do close above it, so we can enter at the close of that candle, stop loss covering the low, and we can target a 2R minimum. We wait for price to play out, and there we go, we have hit target, and now we can go back to our 1 hour time frame, and we can target our original target here on the 1 hour time frame, and we can let this trade play out. And there you go, for a total of an 8.97 R on this position. And that is the power of using proper top-down analysis. In this next example, I'm going to share with you and break down a trade I've taken alongside my students in our private mentorship program. After the trade has been explained, I'm going to talk a little bit more about that mentorship program. So if you're truly ready to become an independent, profitable trader, stick around because you would not want to miss that. On this trade, we started on the daily time frame on GBP USD. I took alongside my students. Looking at this daily chart, I teach a simplified way of finding a mechanical daily bias that I'm not going to give away for you on YouTube for free. But looking at this chart, what do I do? Here we see a trap. We see a swing high being swept on the daily, and we see a single up close candle that took out that high. So a body closed below that up close candle. What does that give you? That gives you a valid change in the state of delivery. So normally you would have a bearish bias from this change in the state of delivery. But I was telling my students I'm looking for this fair value gap to get inverted, and I had a long bias. That is the technique that I teach in the program, and I'll show you how it played out. Looking at this order block, we see that the first candle rejected it. This candle traded into it and didn't reject it, and we had enough strength to trade past the previous day high. So I am definitely expecting price action to trade into this fair value gap and even invert that gap. So keep in mind that we have a bullish bias. Now from the daily, I dropped to the 1 hour time frame. And here on the 1 hour time frame, I can break it down a little bit more. Here on this 1 hour time frame, here we have that daily fair value gap that I was busy looking at for a potential target. And what do we see? We see that we do have a sweep of a swing low, and I was waiting for the lower time frame, this 1 hour, to align with my higher time frame. Here on the 1 hour time frame, what do we get? We see that after that low has been swept, we have swept out a new low, and we are busy getting a change in the state of delivery to confirm my overall market direction. I waited for that change in the state of delivery to get confirmed, which it does over here with a body close. And remember, we have a bullish bias in mind. So I was telling my students that I'm eyeing these fair value gaps to respect prices, to respect higher prices. Now, simply, I'm just waiting for price action to trade into that gap and trade away from it. That is enough for me to confirm a bullish bias. This is where I dropped to the 5-minute time frame and I started looking for my entry model. Here on the 5-minute time frame, what do we have? We have our initial change in the state of delivery over here. So our 5-minute has been confirmed bullish out of this gray box. Remember, this gray box is my 1 hour fair value gap. And I simply waited for a new order block to form. Looking at this piece of price action, what do we get? We open, we start trading higher, and we took out these relative equal highs. But that is not enough for me to take a trade. I need extra confirmation. So then looking at what price action does, we trade into this down close candle, and then we reject that down close candle with a very big engulfing candle. That engulfing candle is enough momentum for me to feel safe on this trade, and I placed my stop loss a couple pips below the low, and I targeted the beginning of that daily fair value gap. This was the trade that I've shared in the mentorship program. Looking at how this trade plays out, we trade higher, we come back down a little bit, and ultimately it has hit take profit. So here you can see how I took a trade from the daily time frame all the way down to the 5-minute to execute a beautiful trade exactly the way I've shared with the students in the program. Here I have that trade that I've shared with the group. I had one loss on this day and one win, so I totaled the day for 1R. And then I have another trade that price action has busy and I'm telling them I'm going to break even. Here we can see that trade playing out. So if you want to trade alongside me, a professional full-time trader that has been trading for over a decade, I do encourage you to head over and join and sign up for our mentorship program. This will honestly change the way you see the market and change the way you trade for good. I'm not into selling you hype. I'm into teaching you sustainable trading so that you can take and improve your life. You can go ahead and you can live that trader dream. Keep in mind, it does require a lot of work, and that is why I'm here. Here we can see that here I have a trade review section. I'm obviously not going to go into it because this is paid content. I review your trades, I answer all of your questions, I help with trading psychology, and we have people getting funded. We have live trading. I record all my trading sessions, and every single day I share a video breaking down the market. I'm again not going to select it because if I go in, you would have access to all the links and will be able to see it, but it is paid content only. So if you're ready to take your trading to that next level, I do recommend signing up for our program, and you will honestly not regret it. Guys, thank you so much for watching today's video. Let me know in the comments what you want to see next, and I'll be happy to help you guys with a new video.